Hey, hello guys, welcome back to another exciting episode of Career Wise. So today we are going to speak about lot of altu faltu बातें, इधर उधर की बातें, like politics, relationship, about Bollywood actors, right? Not about SAP ISU. Shall we start? Okay, hold on. We are not going to start anything like that. Today is April 1st, so you know what I was doing about. So we will talk about SAP ISU FICA again, which will be in continuation of our previous class. And in today's class, we will be speaking about basic accounting principles of SAP ISU FICA with some organizational structure and how the structure is in relationship with SAP ISU FICA. In addition to that, there is another video. If you might have noticed, we are releasing 2 videos per week now. Yeah, that's additional effort. So the second video would be accounting process chart. So it's a complete chart with several blocks with it, and we will talk about each block and the technicalities behind it, and also how in SAP ISU FICA that is applicable. So it's going to be a big topic today. Please watch till the end and let us know your queries, comments in the comment section, or you can drop us mails again. So let's start.
Yes. So as we understand, there are different cycles for the cycles for the open items, and those open item process can be executed in mass in parallelly, and it will generate a specific documents to communicate with the customer. And once these are generated, we also keep these records as a summary in our ledgers. And whenever there is an inquiry, we can provide those information. That's how FICA is so popular, because we have the options of parallel run, mass execution, and we have all the records for the process. Okay. Now, wherever there are contracts or contract accounts, that means wherever there is a master data structure, we are applying all these open item lifecycle process, whether it's utility or insurance segment, or IS telecom, or IS retail. Everywhere we can apply. But in retail, these are very new concept, because in retail, the banking segments, they introduce these processes of installment, deferral payments. Some banks provide some cards, and they are saying that if you are not able to pay on front, you can change your payment into 3 installments. If you are not able to pay in 3 installments, you can convert them into deferral dates. So those applications are very new to the IS retail. Okay, so finally we come to the credit worthiness, and which get generated on business partner level, but it needs all these information what we are providing at the contract account level. Now this credit worthiness sees the terms of payment, means within how many days he need to pay, or the customer need to pay, the settlement category, whether it is paid continuously or not, the interest calculation, how many times the interest calculation is applied, the account determination IDs, because account determination ID will be identified the ledger, in which ledger it is going, like receivable or payable. So those information, tolerance group, account category, individual dunning process, everything are responsible to identify the credit worthiness. Okay, so that's how this is linked, and we'll proceed with another slide, which is not mostly towards FICA, but that's related to the accounting, basics of the accounting. And once we go through the basics of accounting, we proceed with the FICA more details. What are the master data for the FICA? Like, we created the whole master data for the users. Similarly, we need to create the whole master data for FICA, and we'll do configuration for that. So basic accounting starts with the debit and credit. So debit means we need to going to give, credit means we'll get, right? So like debit, when there will be expenses, debit, assets, losses, drawing, all these are comes under debit. Okay, they called it a deal. Whereas credit is mostly whatever your asset, your capitals, your liabilities, income, profit, all things are comes under credit. Okay, it's your strength kind of. Debit, you have to debit kind of your weakness, you have to pay that. Credit, you will get that. So profit, income, liabilities, and capital, it's called clip and deal. So within this stuff, the whole general ledger get created. Now, what is the objective of to create a general ledger? To create a balance sheet. So now, whenever you create a balance sheet, you have to put two segments. One is debit, other one is credit. And the debit side, we'll put all these drawing expenses. Expenses, example, purchase, cost of sale, rent, wages, depreciation. Okay, your heat and light, like your utility bills. Assets like accrued income, fixed asset, VAT, taxes. If you are paying something to bank, if you getting some asset from any of your debtor, okay, trading partners, you have to pay them. Prepayments like any advance, stocks, everything comes under asset. Losses, like you didn't get what you were expecting, so those are losses. So these things comes under debit. Similarly, credit, whatever asset you have right now or capital in your bank, so that is liabilities, like trade creditor, somebody need to give some money. VAT, lease creditor, loan creditor, all those things are part of your liabilities. Similarly, income, if you sell, you will get some money. So sales is one of your income. Other incomes like renting something, granting some income, grants you are getting somewhere. Okay. And profits, retaining profit, net profit, whatever you are expecting, you are getting that money. So all these things into a single balance sheet. So what is the role of a balance sheet? Any idea? So from balance sheet, we can understand the health of an organization, of a company, or of a services. Health means whether it's in a good health or a bad health. If it is going on losses, we consider it's in a bad health. If it is always giving you profits, it's a good health. So to understand the health of a company, we need a balance sheet. And to create a balance sheet, we need two entries. One is debit, other one is credit. And this debit credit give you the exact output, but exactly the health of the organization. Any questions till now? So whenever you are gaining something, actually, whatever the credit are there, you can see. Okay, so whenever there is a double entry system, okay, double entry system means if somebody is providing some kind of services, okay, there is a service, okay, you provided the service and you are getting some money. That means you are get paid through cash. So because of the service, there is an open item of 50, and because of the cash, it is of 50. So 50-50 get adjusted. So this is called double entry concept. So even if that's a credit entry, still then we are entering two stuff. One is to open the item, second to close that. Similarly, even if it is a debit item, okay, you paid a rent 800. So your rent invoice come 800. You need to pay that. You paid by cash. Okay. So 800. So again, it's get balanced. Right? Any questions here? No? Okay. So the basic formula of accounting equation is any worth or profit equals to your asset minus liabilities. So liability is in which part? In your credit part. Debit part is your assets, right? So what you are doing, you are just subtracting them, asset minus liabilities. And when you are subtracting them, and it is like now, what is the liabilities? Liabilities equals to your account payable, accrued expenses, current portions or debts, income tax payable, all are liability on your company. Now, if it is more than 12 months, 1 year, okay, then on top of this liability, the taxes need to be added because you pass 1 year. The interest need to be added on top of this, on top of the liabilities. Okay. Similarly, the profit or the what we call the operation profit of operational income, mostly it is for the service companies. For product companies, it is based on the product sale. But for net profit equals to your gross margin minus operating expenses. Whatever the expenses, like for a utility company, whatever the expenses spend on the infrastructure, on the energy buying or selling, so those operating expenses, if you remove from the gross margin, whatever the total amount collected from the customer, you will get the income. Okay, some of the company, they are target-based profit, like they are still doing profit. Like one of the company I know, they creating good profit of 200 crores. They make a target like 400 crores we need to do next year. Okay, so that means that is profit 400 crore, but they targeted that 400 crore and they make it 300 crore. So what they will publish, whether they make profit or loss. So some of the company, they show that it's a loss because they targeted 400 crore, but they achieved 300 crore. So they're saying that, oh, we lost 100 crore, but that's not actual. The actual profit is 300 crore still. Anyway, so they do, some company do that. Now, all the transaction, profit, loss, all these calculation, debit, credit, where we enter them? So mostly we enter them into ledgers, general ledgers. So general ledgers are in a list of accounts. So what they do, they create many books, and in those books they enter all these transactions. And if you will create a shelf where you put all these books, we call them chart of account. So in a shelf, you consider there are thousands of books or ledgers. Each ledger has some number. So we consider them a chart of account. That means it's a master book where all the book details are there. Like if you consider that in your school there are 5 classes, class 6 to 10th, and each class has 10 sections. Now each section has one attendance sheet. Then your headmaster, they create a master attendance sheet where he put all the classes and each class details are there, and that would be your chart of attendance sheet. Similarly, we have ledgers, we have accounts entering into each of the ledgers, and those ledgers detail are entered into a account which we call a chart of account. So a chart of account is a listing of names of accounts that a company has identified and made available for recording transactions in its general ledger. So we already discussed many times, general ledger is just a book to enter all the transactions. A company has the flexibility to tailor its chart of account to best suit its needs. Okay. Now that based in different companies, some company put some of the accounts into, like, as I mentioned, there may be target-based profit, there may be target-based loss, there may be actual profit or loss, there may be chart of accounts for shareholders are different, chart of account for the internal purpose would be different. So based on the company's requirement, there is a flexibility to create the chart of account and tailor based on the business practices. Okay. So as I mentioned, general ledger, what is a general ledger? General ledger is that part of accounting system which contains the balance sheet and income statement accounting using the recording transactions. So whatever the transaction, whatever the amount coming, whatever the going, So those transactions need to be recorded on which date it will come. On which date it was came, and on which date it's went. So based on that, there will be records. So date, amount, who gave this, or all those details where we maintain. That's a general ledger. All the transaction is added. Then account definition. What is the account? A record in the general ledger that is used to collect and store similar information. For example, a company will have a cash account in which every transaction involved cash is recorded. So in a general ledger, again, you have sub books. Okay, we call them accounts. Now it's not a sub ledger. In again, general ledger divided into sub ledgers. In sub ledgers, we have accounts. So in accounts, what we understand, we divided the transactions like in a utility company, some people pay by cash. So for that, it's separate account, cash account. Somebody pay by direct debit. So direct debit accounts. Some people pay by what we called considered by phone pay. So that will be separate electronic transaction. So that means when finally it will go to the same ledger, but there are separate stuff. So if somebody inquire, okay, that I paid on this date by cash, so it is easy to identify in which account it is paid and how much he paid. So those transactions will be captured, and it's easy to compile the informations. Okay. So that's all details about general ledger, account definition, and chart of account. Now, in a big company, like where there is a very big company, how exactly the chart of account looks? For example, we can see in a large corporation, the chart of accounts are divided into various segments based on the entries. So, like here, we have asset, liabilities, and owner or equities. These three are the basic input or basic debit side. So your liability side or credit side, you can see operating revenue, operating expenses, all those details are there. So now for this, we need to create books, a lot of books. So current asset, there are books between 10,000 to 169999. So a lot of books for the current asset. Now, a gap between account number allows for adding accounts in the future. That means that it will be the first asset, current asset book. Name is 10,000. In that, there would be, let it be capital book, capital account. So how much money is there in different banks? So that is 10,100. Let it be they added new bank account on top of that. That may be 10,101 for ICICI. Currently, they operating with SBI. Afterwards, they identified there is a bank, HDFC need to be added because a lot of people move to HDFC. Many people paying through international banks, so they added some international banks like HSBC. So that means each time they are adding one new account to their capital accounting. And for that, they have to understand how they plan the chart of account. So in future, they can add. Similarly, current liabilities, it is 20,000 to 24,999. So these are nothing, the book numbers only, as I gave the example of attendance sheet. So that attendance book has a number by which you can understand this is the class D attendance sheet or class 7A attendance sheet. So the headmaster can understand, okay, that is the year, year 2000, class 7A attendance sheet number is this. So someday somebody will come and let it be some guy from that school got a big position in government job. So government people want to inquire that whether that person was in that school or not. So now when they come to the school, the headmaster understand, okay, this is the year 2000, and for this year, the attendance sheet is, let it be 10,100. So he'll extract that and understand the information, compile that, and give to the feedback to the inquiry person. Similarly, in transactions, we enter a lot of transaction details, and that would be entered into the books. Those books would be part of the chart of account. From chart of account, to understand which GL we need to identify. From GL, we can identify the accounts. Okay, so whatever I gave the example, these are the some examples. They put some more examples, cash fund, inventory supplier, all those details. Right. So let's move to ISU. These are the basics. So how it's linked to our organizational unit, that need to be understood. Okay. Okay. So whatever I explain, if we link that to the ISU segment, we need to understand the organizational structure. Okay, so contract account, in the contract account label, we enter the company code, division, main transaction, sub transaction, account determination ID, and determining the GL account. So let's open the SAP system so we can see how it's linked actually. Okay. So okay, so let's go to one T code that is called EK01. So in EK01, it is asking for a chart of account. So as I mentioned, the chart of account holds all type of GL, general ledgers. Okay, so if let's consider 1000, or our chart of account is GSTL. Because chart of account need a company code as well. So let's see what are the stuff there. ENST. Okay, so just execute this. Now, as I mentioned, for chart of account, we need a company. Okay, so we need to set up a company code, account determination ID, main transaction. So it linked to a GL, general ledger. And it also need a posting area. Okay, application area will become automatically because we'll go with the utility application area. That is predefined. Okay, but did you identify the sub-ledger? No, the sub-ledger would be, if we go to the EK02, so you can see in EK02, company code is there, division is there, account determination ID, but you find the main transaction and some transaction. And then it is identifying the GL, general account. Okay. Similarly, control area, business area, all those stuff is there, tax determination is there. Now, if you put these details here, what it will do, whenever you execute some process, it will see the tax determination, the business area, only for those areas and those details it will allow you to post into the general ledger. Okay, so let's go back to the PPT, then we'll come back again here. Okay, so all these details, whatever company code, division, main transaction, sub transaction. So company code, division, we are passing at the installation level. Okay, let me go to again one of the installation. So any installation to 17. Let me get a good data. So So you can see this is a billing document, and from billing document, I'll get a business partner. And I'll use a key code called ECE-NVBP. Now, ECE-NVBP will show you the data environment. And here we have installation 270. So here you can see at the installation level, we have a division. Sorry. The division is there. At the contract label, contract account label. At the contract account label, if you go to the payment and taxes, you can find the company code and standard code. And in the general data, you'll find the account determination ID. Account determination ID. So account determination ID, division, company code, we got. So what next? Main transaction and sub transaction and general ledger. So main transaction and sub transaction and general ledger. So from where we'll get the main transaction and sub transaction? As I mentioned, at the billing schema level, at the step level, you can see this is main transaction, debit sub transaction, debit sub transaction. Now there are two debit sub transactions. These sub transactions link to a main transaction. So these are the sub transactions. These sub transactions link to the main transaction. So main transaction 5151, which has two sub transactions 001 and 5001. Right. So these sub transactions link to the main transaction and link to the determination ID and division, which is linked to a company code to define a general ledger. Okay. So the similar stuff we are just trying to explain here. So all this information, whatever we pass at our master data level, that need to be identified the correct general ledger. Okay. Possibility of allocating a contract account or contract data. Now this contract account and contract data, they hold the account determination ID. So contract data that link to your what we called billing, and contract account link to your invoicing. Okay, so if we see, so what exactly it is. So what exactly we are doing, we are creating a company code, we are creating a division, we are linking them to main and sub transaction, we are linking to ADID code, and then we'll get the general ledger. Okay, and that what exactly I showed to you. Now, if that is the case, then what is structure? What is the organizational structure by which it is linked? Now, here you can see there is a client. Now, client, it is from the perspective of SAP. When we logged in, we are using a client logged in. So client is the major unit. The bigger unit is the client, or you can see client would be the licensing given by SAP. So client is given. Under client, we have chart of account, we have control area. Now, chart of account cannot be done without company code, without control area. Now, when you create a control area, it will ask for the cost center and profit center. So under control area, you have cost center, profit center. Under chart of account, you have company code and division. So division we created, that's utility division, and we need to create the company code. Then we need to create the chart of account, and we need to allocate the control area. And below control area, we have cost center and profit center, and this way they are integrated. Okay, so if we see what is the basic, it started with division. Now division, we know electricity, gas, water, district heating, cable TV, all the divisions. We configure the division, or we can use the default divisions, whatever given by the standard SAP. Similarly, ledgers, again, we need to create these ledgers. And once we create the ledgers, how to create, there are T codes, there are configuration. We will see that in our future classes. So in ledgers, we create the ledger details. And I will enter the numbers, like whatever the numbers there. So each ledger has its identification. So those ledgers, you can see general ledger this, and it's linked to the sub transaction and main transaction, account determination, ID, division, and company code. So we need to create these ledgers. And then we need to create a chart of account where we need to allocate these ledgers, and then the whole structure need to be created. So these are the definitions. What is a ledger? So now I mentioned multiple times company code in the system. So what is a company code? A company code is the smallest organizational unit for which a complete self-contained set of accounts can be drawn up. Now, that means a company code, a individual content where all the debit, credit, and transaction can be done. Okay, why it is the smallest organizational unit? Because you can create a group of company codes. Okay, and we can link each company to that. So a company code is smallest organizational unit for which individual financial statement can be drawn up according to the relevant commercial law. Now, when you create a company, it's linked to the jurisdiction. Jurisdiction means the area under which the company actually activated or following the rules. So let it be you create a company code. In India, there is a organization called ROC, Registered of Company. So you are come under the Registered of Company, and the relevant commercial laws automatically apply to that company. Then only you are able to do all the transactions there in that geography. Okay, so that means when you form a company, automatically the commercial laws are applied on top of that. For for chartered company codes in the customizing financial accounting, like that's not a legal entity, but you can create and you can link that to a legalized company code. Okay, so that means for the configuration perspective, you can create company code, but still then you can link to the legal entity for the transaction and assignment to the global ledgers. Okay, because whenever there is a financial transaction happen, it needs some commercial laws. Okay, because you are operating within a geography, and that geography governed by some law, and that law need to be obeyed by the company. Even if we create any company which is not a legal entity, we still need to assign that to a legal entity which has all these legality on that jurisdiction. Okay, so that means by creating a company, we are bounded with the commercial laws, we are bounded with the ledgers, and also we are using that company to create our own ledgers for transaction. Now, mostly in SAP, core SAP, when we there is a client, it linked to the company code, plant, personal area, control area, sales area, and purchase organization. Now, these all are integrated actually through a client. So, based on your requirement, you can link all those parameters with each other. Okay. So graphically, if we represent in from the SAP perspective, you can see a company code can be created for any organizational or manufacturing unit or any independent accounting entity. So it's like a bank can be a company, like a small shop can be a company. So all are can be companies. So there is no much difference from our perspective whether it's a financial or independent accounting entity or a manufacturing unit. The company can be created for anybody for financial transactions. Okay. Similarly, multiple companies can be linked to a single client, and multiple storage location or financial small plants can be linked to a single company. So it's based on the structure, which kind of operations they are doing. So client holds company code which may do manufacturing, or some organization which do multiple operations in different units but having same company code. But these company codes need to be linked to the client, and they should follow the same rules. As I mentioned, there may be multiple plants, those are linked to a single company code. There may be distribution channels, these are linked to a single company code, but they have to finally comes under a single entity or organizational units. Okay. And there are concept of subsidiary companies as well. There are maybe small company, they are called as subsidiary companies. Again, finally, they link to the company, and wholly we call them enterprise or client. Okay, and under single company, under company, there may be factories. Factories may have plants. Subsidiary companies may have some other company they provided for sales and distributions, for other task of the sales operations, and they comes under sales organization. Okay. Similarly, when they are collecting the money or they are providing some services, you can divide them into some small divisions. And if the factory needs some raw materials, they can put them into warehouse, and that link to the storage location. So this is the hierarchy of a company code. So probably we'll again connect and we'll see in the system.